Hi, my name is Adam from dodjit.com and this is your video briefing for Monday the 18th of May 2009. Alright, well, what's happening in the markets? Well, basically we retraced last week. Now, if we look carefully at the charts, we can see that we did receive a slight correction, but the thing is, it wasn't like a major correction. When I'm talking about major correction, I'm talking about something along the lines of what happened around here. Look at these candlesticks. Look at the mass selling volume on this candlestick. Look at the selling pressure. We can see it by the size really of the candlestick. And basically what happens, since we received this doji-like candlestick and this inverted hammer, we've received this nice bullish white candlestick. We can see that the bulls have really started to come back into the market. We've been climbing high already for around 2 months. We did receive a slight pullback last week, and to tell you the truth, this was the first week in over 9 weeks that we received a major, I wouldn't even really class this as a major pullback, but we received a pullback in the markets. And I think most of this is really to do with profit taking. We came down to test our recent resistance level. We can see 1, 2, 3, and now we're testing it. I think we might find support around this level. To tell you the truth, after such a long rally, I'm a little bit skeptic of getting into any positions at the moment. I really do want to see how this plays out. I'm not quite sure what's really going to happen now in the market. We can see that the two moving averages, the 200-day and the 50 moving average, they are starting to converge one towards another, and I think at this moment in time I am a little bit more bullish than I am bearish. And if you look carefully at the chart, we are now testing this support level. We've got kind of like a double support level around here, I like to call it. And I think at the moment, I don't know, it's a little bit hard to say at the moment. I think we're going to just have to wait for the next couple of days. We're going to have to wait for the US Open today to really see the type of direction that we're going to receive. At the moment, this just looks like a classic pullback. I would be cautious at the moment. I would see how things are going to play out, how the market's going to open this week. If you look also carefully, and this is why I'm saying we're just looking at a pullback, look at this. We've got declining volume on a correction, and what this normally means is that, yeah, we are receiving some profit taking. The selling is not, I'm not talking about mass selling in the markets, so just keep an eye out, see if this is going to play out as a pullback or not. And obviously, you know, if it breaks support levels or it just continues to head higher, then we are going to receive a clear direction and we're going to think about entering some different trades. If we just flip over to some Forex charts, I just want to show you, we are seeing the same type of, same type of trading at the moment on Forex. We've received this massive rally. We also received it on the Euro from mid-April. And we are now starting to see signs of a slight double top. We can see it around here, 1 and 2 around here. And what I do want to see is, I do want to see a break of this trend line going up. Like that. If we receive a clear break of this trend line, so then yes, I do know that we've started to form this double top formation. Again, I'm a little bit skeptic about taking this trade short, and the reason for that is because if we do continue higher on equities, it's just going to drive this currency pair higher. We do know that there's a strong correlation between equities and the euro against the US dollar, so I would be cautious at the moment. It's a little bit of a hard week to start trading because two things. Number one, we are after this massive rally. So I think the best action at the moment is just to see how the markets play out over the next couple of days. See if they head higher or head lower. And then according to that, we're going to be able to receive a nice clear direction. In addition to that, we haven't got much economic data coming out this week. So we've got some data coming out on Thursday or on Wednesday, I can't remember exactly, from England. We've got the CPI figures coming out. Apart from that, there's nothing really, that's meant to cause really major movement on the markets. We've already received all the GDP figures, CPI figures, interest rate decisions, all of that. We received that last week and the week before. So, see how it plays out. Let's see what happens. I wouldn't rush into a short position on this at the moment. I would see how it plays out because we could see it head slightly higher. Obviously, if we're going to break this trend line going down, so then yeah, I'm talking about a clear break. And what I normally like to do is I like to wait until the end of the trading session, until we're coming close to the end of the trading session in the US, to see whether the break is a real break or if we're receiving a false break. So that's something you want to take into consideration. The next chart that I want to show you guys is the New Zealand dollar against the US dollar. Now, the reason I'm showing you this chart is because we didn't post this on our chart analysis page. So let's just go over it for a second and see what's going on here, because we've actually been receiving some nice swing patterns. And if you look carefully at the chart at the moment, we can see that we are now retracing. And what I'm going to just do, I'm going to just extend my Fibonacci tool like this, and we can see that we're now trading on the 50% range. Now, what does this basically mean? Number one, the trend has changed. That's no doubt about it. We've received a higher high and a higher high around here, and a higher low if we compare it to this high and this low. So there's no doubt about that at all. The thing is that really we're going to just have to continue to look at our overall momentum and see how it's going to just play out in the markets. I am looking to take this long. Look at the position at the moment. It is now trading around its 50% Fibonacci level. We are now on trend line support. This is a nice trade. The only problem at the moment is like this. I am looking at minor divergence on the RSI, which normally points to some bearish action. So what I do want to do, I'm going to take this into consideration. This could be a nice setup. I want to see it start to climb a little bit higher. And what I might use as an entry point, and this is something that you want to take into consideration, is our resistance level of 0.5930. So this is a nice setup. Let's just zoom in on this for a second. Just see it around here like that, so we get a clearer picture. And we can see we are on trendline support. We are on our Fibonacci 50% level. I would use the 0.5930 as an entry point, because obviously if we're going to climb higher, we're going to break that level. So then what we are aiming for is another higher high. Obviously this all has to be in line with our overall momentum, and I am looking for a higher equity market to back up this trade. Hope you enjoyed the video. My name is Adam from dodjit.com.